We're just going to give it a few more minutes to allow more people to join before we start, because it was only due to start at 1, so we'll just give it a few more minutes because we've got a fair few more registered for it. To those that have just joined, we're just giving it a couple more minutes and then we'll get started. Okay, so we'll get going. So thanks everybody. Welcome to our self-assessment masterclass. Thank you for joining us today. Whether you're a sole trader, company director, business owner, self-assessment can feel confusing. I know we're getting a lot of questions at the minute with lots of rules, deadlines and obligations to keep track of. Should take about half an hour, and we'll be covering some of the most important things you need to know about self-assessment, including who needs to complete a return, key deadlines, what income needs to be declared, allowable expenses, and how your tax is calculated. Today's masterclass will be led by Tommy and Saudi, who will be sharing their knowledge and answering some of the most common questions that we receive from our clients. If you do have a question as we go along, if you pop it in the chat and then we'll answer them at the end. So we'll hand over to Saudi first. Saudi, can you tell us a little bit about what is a self-assessment to start with?
Yeah, so self-assessment is basically a system that HMRC use in sort of capturing and reporting any sort of income that you might have and calculating any income tax that might be owed, national insurance and capital gains. Individuals that are that need to complete or submit a tax return, they'll need to do it sort of normally each year, and the relevant income and gain is it's calculated from the 6th of April to the 5th of April each year. And that way HMRC are aware of what income you've got that is either taxed at source and not taxed at source, and that way everything gets reported in one go.
Super, thank you. And Tommy, how is the tax you owe calculated through self-assessment?
So the amount of tax that you owe through self-assessment tends to depend on your total taxable income for that year. So HMRC are going to look at things like self-employed profits, any dividends you might have received, rental property, any income from that. You've got savings interest, and then also capital gains. So what you'll then do, you'll look at sort of applying available allowances, any tax bands. So some of the key ones that you might have seen previously: personal allowance, you've got your basic rate, higher rate, and additional rate tax bands. You've got your dividend allowance, and then also your capital gains tax allowance. So all that gets applied. Once you've then sort of calculated how much tax would be due, you'll deduct any tax you've already paid, whether that's through employment or if you've paid anything in advance. And then that essentially leaves you with either a balance that you'll pay to HMRC or a refund that's due back to you.
Great. And sadly, not everybody does need to file a self-assessment return, but can you tell us who would need to file one?
Simply put, anyone with any untaxed income needs to complete a self-assessment tax return. So untaxed income would be sort of if you're a sole trader or if you're in a partnership, if you have rental income, if you're a company director getting dividends or just dividends in general. People who have high or need to repay some of their child benefit. If they've got income over £60,000, they might need to do that if they've got kids. If you've had a capital gains in the tax year, that will also need to be reported. If you've got any interest income over £500, so if you've got several savings accounts and that's accruing interest, again, you'd need to complete one there. Another one that a lot of people tend to forget is if you've got employment expenses over £2,500, you'll need to complete a tax return as well for that too.
Okay, great. And on your self-assessment, Tommy, quite often there's payments on account, which can cause some confusion. Can you tell us a bit about what they are and how they work?
Yeah, of course. So payments on account is HMRC's way of collecting tax in advance for the following tax year. So if you file your tax return and you've got a tax bill of more than £1,000 and less than 80% of that tax has been deducted at source, so through employment usually, HMRC are likely to ask you to make payments on account. So the way they calculate that is 50% of your previous year's tax bill due on the 31st of January, and then you've got a remaining 50% due on the 31st of July. So if we kind of just talk through an example, let's say you've filed your most recent tax return and you've got a bill of £8,000. On the 31st of January, you're going to have that £8,000 balance in payment. Now what you'll also have is a £4,000 first payment on account. You've then got a follow-up £4,000 due on the 31st of July. So that's your second payment on account. And then that effectively means that you've got sort of a £12,000 bill and then another £4,000. If you then file for that following year and you've got a tax bill that's more than £8,000, you've then got to pay the following difference kind of the next January. But if it's less than £8,000, you're going to effectively receive either a refund or they'll offset it against your future liabilities. Now, this one is usually the one that catches first-time taxpayers out because that first January payment is going to be sort of significantly higher than you would have expected.
Right. And Saudi, you've mentioned who needs to fill in a tax return, but what types of income need to go on a self-assessment return?
Essentially, any sort of income that you might have will need to sort of pretty much be declared. So if you've got employment income, if you've got interest income, dividend income, even if you've got a benefit in kind, so if you work for a company outside of your normal company, or if you need to complete a tax return for whatever other reason, if you receive a benefit in kind and you receive a P11D, that needs to get reported as well. Any pension income you might have received, any if you've received any pension contributions, pension income, that will also need to be reported. And if you've had any sales of assets via a capital gain, so for example, you sold some gold, sold some shares, or cryptocurrency, again, gains like that do need to be reported too.
Super. Tommy, could you explain a little bit about the key deadlines and important dates that we need to be aware of for self-assessment?
Yeah, so in terms of sort of self-assessment, obviously the main one being what actually is self-assessment tax year. So that's from the 6th of April to the 5th of April the following year. So we're currently in 2026-27. You've got a couple of filing deadlines. So if you file via a paper return, so that's something that not a lot of people do. But if you do, the deadline would be the 31st of October. After that 5th of April, you've got an online tax return filing deadline. So that's the one that the majority of our clients will go for, and that's the 31st of January, the following period. You've then got on the 31st of January, you've got your tax payment deadline for that previous tax year, as well as also the first payment on account, which we discussed before. And then the 31st of July, you've got that second payment on account due. Now, if we're to give you the best tip we can, don't leave it until January. Completing it early, it's giving you a good chance to understand your tax position well in advance of that January deadline, gives you time to budget for it and make sure you've got the funds there available.
Super. And Saudi, nobody obviously likes paying tax. What sort of things do people need to consider to reduce the tax bill?
The main element is really making sure all aspects of your tax return have been completed correctly. So if you've made any pension contributions throughout the year, we want to make sure that that is fully declared, because that can increase your basic rate band. If you've donated to any charities and there's gift aid involved, or just charitable contributions anyway, we need to make sure that that's fully taken into account. If you're a sole trader, we want to make sure all your expenses have been declared properly. You've made sure you claimed your mileage and any other expenses that you potentially might have missed. If you are, or if you've taken a loan out to support your business, but that loan is personal, you want to make sure that that interest is taken into account on your tax return. If you've got a mortgage on a rental property, again, you'll get interest relief. You'll get basic rate relief on the interest that you've paid. So again, you want to make sure that that's also taken into account too.
Thank you. And even though we're suggesting doing it early, Tommy, what would happen if you were late filing your tax return or paying your tax?
Yeah, so if you do miss that self-assessment filing deadline, so usually the end of January that we spoke about, normally HMRC are just going to issue an immediate £100 late filing penalty. So it doesn't matter what you've got to pay, even if there's nothing that needs to go on there. If they're expecting one, then you're going to get issued that £100 straight away. Further penalties then will tend to be added if it remains outstanding for longer. If you pay your tax late, HMRC are going to charge interest from the due date until the balance is cleared in full. So interest gets charged daily, so the longer it goes kind of outstanding, the more that interest is going to accrue, the more you're going to owe on top of the tax. Interest charges are separate from penalties. So if you don't pay and you've not filed, you're going to have both outstanding and both accruing, which is why it's so important to remember that filing and paying are treated separately. So even if you can't afford to pay the tax, it's a really high bill for you, you still better get that return filed to make sure that you're not getting any filing penalties. And then what we would say is you want to contact HMRC as early as possible. So with things like being unable to pay, they have a lot of different options, such as a payment plan to help you spread the cost. And in kind of my experience, HMRC tends to be a lot more understanding where you actually communicate with them. So file on time, make sure you speak to them early, and it could save you sort of a lot of unnecessary penalties, interest, and also just the stress that comes with that.
Right. So we have come to the end of the main questions. So we're going to go into questions that you guys want answering. So if you do have any, please pop it in the chat box. Let's have a look what we've got. So either Tommy or Saudi, how long does it take to get a tax refund?
I'll go on Saudi, if that's okay with you. So in terms of timescale for a tax refund, it's kind of as long as a piece of string with HMRC. Usually it can depend on how and when the refund is claimed. So for most self-assessment refunds, HMRC's aim is to process it within a few days of the submission. So once that goes through, you can sometimes expect it to hit your account, providing that's online, within 5 to 10 working days. Now, if HMRC decide that they need to make additional checks, so something like if there's a significant change in your income, a large repayment claim, so quite a lot of money, or where the information needs to be verified, so they just want to go through some of it, then that can sort of drag out that process a little bit more. If you're in a position where you're expecting a refund and it hasn't arrived after a few weeks, first thing to do, check your HMRC online account to see whether they've issued a repayment, or if they're looking for sort of extra information. And one of the main sort of points with that really is submitting your tax return early doesn't mean you have to pay your tax early, but it does mean you're going to receive your refund much sooner. So if you do think you're owed one, or you're going to be owed one, you're better off getting that one done as soon as that tax year is over with, rather than waiting until the end, because it's just sort of making that refund take a lot longer than you need it to.
Right. The next one's on pension contributions. Can I check you're only referring to pension contributions via salary sacrifice needs to be declared on a self-assessment for a limited company director, where the company contributes to pension contributions as a company expense declared in the company accounts, does not have to be declared via a self-assessment tax return?
I'll take this one. So we're actually referring to a bit of both. So if you are making pension contributions outside of your employment income, obviously that will increase your basic rate band, so we want to take that into account. However, we do want to know if your salary has pension deductions involved as well, just because that might mean that you could have gone over the pension allowance. So if you've exceeded £60,000 worth of contributions, or if you're a high income individual and that threshold is decreased, we need to be aware of that, because if you have gone over, then there might be some additional payments that you might need to make.
Okay. You mentioned employment expenses of more than 2,500 need to be reported on a self-assessment. If the company expenses have been recorded in free agent and already reported through quarterly VAT returns, do they also have to be reported through self-assessment?
No. So you can only claim it in one place. So if you've already claimed it through your limited company as an out-of-pocket expense, for example, then that is a company expense and goes against your corporation tax. There are slightly different rules for an individual claiming an expense as an employee and a limited company. So the difference is it wholly, exclusively and necessary? So could you have done that job as an employee without claiming that expense? So for example, if it was myself, I can't claim, for example, if I went to the shop and bought some notepad and pens to be able to make notes on, I couldn't claim that as an expense because it's not necessary for me to do that. However, if I was a limited company owner, I could put that expense through my company.
Great. I think that answers the next one as well. What is the employment expense? So work on that. What should you do when you can't get details of selling shares during the tax period?
You should always be able to get a record of from the platform that you're using to sell your shares. It's very uncommon that you wouldn't be able to get full details of it. Ultimately, we need to know how much you initially paid for those shares and how many shares you purchased and how many shares you sold and how much you sold them for. The costs associated with that, we can also claim as an expense towards that gain too. So if you can get those details, that'd be good.
Tommy, did you have anything you wanted to add on that one?
Just on that one as well, it's a case of if it's obviously quite a special circumstance, might be one that you want your accountant to take a little bit more of a dive into. You know, there's different ways of working around it. If it's a platform that's almost disappeared in a very unlikely scenario, I'm sure they'll be able to kind of work with you to at least try and get something. And that's what HMRC would expect. It's doing everything you can to provide as much of a estimate as you can.
Super. How long do I have to do self-assessment for? If I now as a limited company director do my self-assessment every year while I run the business, then at a later date decide to retire, at which point am I now not working, not making any income? Will HMRC still expect me to continue submitting a return every year? Is there any such situation where the HMRC will forget that I need to do a self-assessment, or does that follow me for the rest of my life once I've done one? Tommy?
Yeah, so with that one, as soon as you're not required, so the sort of requirements that Saudi mentioned throughout, once you're not meeting those requirements, you can let HMRC know that you don't require to do a self-assessment. As soon as you let them know, they'll remove any expectation, so they won't continue to chase you for one. If you don't let them know and you file one that clearly shows that you've got no income, it tends to sort of trigger something in the back of their system that says you don't need to do one anymore, and they'll send you a letter saying that's the last tax return we're expecting from you. But with anything like that, you can just contact them and let them know as well. Once you've sort of got away from those requirements and you no longer need to do one, you don't need to submit one. It's not a case of you need to do one forever.
Good news. What evidence do you need to provide for pension contributions?
So you can get a statement of how much you have contributed. So if you can provide that statement, or alternatively, if you've paid the pensions via your limited company and we've got access to that, obviously we can verify it that way too.
Okay. And anything if they paid from the personal bank account, is there anything that they can
Yeah,
do
again,
from that?
if you can get the statement from your pension provider to show how much you have contributed, or if you've got the bank statements that show how much you've contributed, we can take that as reference too.
Okay. Do I need to pay payments on account?
So
Tommy?
payments on account, this is a question that we always get, and it is because people don't like the idea of having to pay tax in advance. So if you know your income in that following tax year is going to be lower, then there is an opportunity to reduce those payments on account. So this is common where you've got an individual who might have stopped self-employment, reduced their hours, retired, as we mentioned previously, or you've had 1 year where it was particularly profitable and you're unlikely to have that repeated. So when you are reducing them, it's really important to be realistic. If you reduce them too far, and your actual tax bill ends up being higher, HMRC will charge interest on the underpaid amount from that original due date. So although you've told them you expect it to be less, if you go lower than what they were expecting, you're seen as underpaying tax there, and then they have within their sort of writing that they're able to charge interest on that. Now, a good rule of thumb to follow: payments on account are based on the past, whereas your actual tax bill is based on what you earn. So if your income is genuinely falling, it may be worth reviewing that, see whether a reduction is appropriate. And it's always worth speaking to your accountant on that as well, because they'll be able to do some estimates with you and kind of figure out a good sort of balance between making sure you're not paying any unnecessary tax, but also avoiding that unlikely sort of incurring of interest.
Great. So a continuation of the question asked earlier on the pension: if the company pension contributions are within the pension allowance and not over, can I check you're only referring to pension contributions via salary sacrifice needs to be declared on a self-assessment return for a limited company director, where the company contributes pension contributions as a company expense, and in the company accounts does not have to be declared via a self-assessment tax return?
So for what we declare on a tax return, for the benefit, so what I mentioned earlier in terms of what can I use to reduce my tax, we need to record on there for how much you have personally contributed into a pension scheme. If your limited company is either deducted via your salary on your payslip and they've had a pension deduction there, or if your company just directly contributed into your pension scheme, we want to be aware of it just in case you have gone over the thresholds. If you've not gone over the threshold at all and you know it, so for example, throughout the whole year you've only contributed £10,000 into the pension scheme via your limited company, then obviously you're not going to have gone over that threshold, more than likely, depending on how high your income is. But it is better to let us know what you have done, so we're aware of the full picture.
Hopefully that answers that now, but if you do have anything else that you want to ask on that, just let us know. If you're completing our tax return and self-assessment, when will you process it if it's due by the 31st of January? As you mentioned, this should be done earlier rather than later.
With that one, at the moment, the team are working incredibly hard on the tax returns now that we're in this new year. So what we're trying to work towards is getting those out as soon as possible. It tends to be sort of as soon as 6 weeks from having the information. If there's sort of exceptional circumstances or there's a little bit more to go through, it can take longer. But if you are waiting for a tax return, by all means, just reach out and we'll make sure that that's being processed as you'd expect.
Great stuff. And then an extension of the previous question as well, Tommy, which you answered. So if I dissolve my business and go back to being a full-time employee, would the process be the same? I contact HMRC, tell them I'm going back to full-time employment and I don't need to do a self-assessment, or would my first declared P45 automatically flag that?
So you'll need to tell them. So the systems aren't clever enough, unfortunately, to see a P45 and say, oh, you won't need to do a tax return anymore. What it tends to be is you'll need to make sure you've not got one final one to do. So if you're closing your business, if you've got a distribution from that, any dividends, but once that's closed and you've declared all of that income, it's a case of let them know you've left that, you've moved into full-time employment, and then they will no longer expect one. The only other way would be is if you filed one that just had employment income on, for example. HMRC would quite often then send you a letter saying we've realised you don't need to do one, so we're not expecting another.
Right. So I think that's answered all of the questions. If you do have any after, just reach out to us. So that'll bring us. Just had one come in. Tax returns are submitted by the 31st of January following the year. We receive requests to complete a questionnaire early in tax year. Is this a standard, or is there a good reason to complete that form now?
So the tax year ends on the 6th of April each year. So you've got from the 6th of April to the 31st of April to get your tax return submitted to HMRC. Obviously, the earlier we do it, obviously it gives us more time to prepare your tax return. It gives you more time to save up if you need to have additional time to actually pay that tax bill. Sometimes, to be honest with you, if you have a payment on account, as Tommy mentioned, and you get your tax return completed before the 31st of July, and it turns out you don't actually owe as much tax as you initially thought, it can reduce that second payment of account down as well. So another reason to get it done before the 31st of July. But giving us plenty of time and giving yourself plenty of time just make sure it gives everyone additional time to be better prepared for it.
Okay. This might be one to pick up with your accountant. What is the cost to closing a business, and can I purchase the asset the business holds? Is the cost 10% of the value of the assets? That might be one to pick up separately with your accountant, but Saudi. Tommy, do you want to add anything to that?
Yeah, it's more when you're sort of closing your business, if it does hold assets and things, there's different things you can do there. The main thing is making sure that when you're closing that business, it is making sure everything's left. So if you've got assets the business holds, you can sell those to yourself as a director, for example, for the market rate, and the cost needs to be kind of what you're expecting, so what you would sell them for anywhere else.
Okay, and then
HMRC is a stickler for market value of assets, like when it comes to things like this. So yeah, do take that into account.
okay, and Saudi, one that you've been answering, can you just confirm that if the pension contributions are not done via payroll, not done via salary sacrifice, they're just out of the company, they're within all the allowances, that they do not need to go on a self-assessment return?
That's correct. Yeah, if it's completely under the threshold, and then no, we don't need to declare it. It's just we're better to be aware of it than not aware of it at all.
Okay. Is carer's allowance something I need to claim? I'll become my disabled wife's full-time carer in the future. Also, my wife has a rental property and she gets disability benefit. Does she declare that also?
Ooh.
It depends on
So carer's allowance, to be fair.
Yeah, so carer's allowance in terms of actually declaring it, if you've earned it, carer's allowance in general is seen as a taxable state benefit, so that would need to be declared on your return. If you're sort of asking more, should you claim it, have a word with your accountants, see what because they'll be able to look into it a little bit more with you, understand your situation, help you understand sort of where the criteria lies on that. In terms of your wife with the rental property and the disability benefit, again, it depends on how much you're earning. Disability benefit usually isn't taxable, but the rental side of things, you've still got a likelihood that might need to be declared. So you'll just need to look through sort of the criteria. Again, ask an accountant, they'll be able to give you a pretty straightforward answer of whether you've earned enough that you should be putting that on a tax return.
Super. Okay, so I think that brings us to the end. We hope you found the session useful and you've got a clear understanding on the self-assessment responsibilities, key deadlines, and what you should be paying attention to throughout the year. If you do have any further questions or you'd like support with your self-assessment, tax planning, or wider accounting needs, we'll be happy to help. Just reach out. Thank you from myself, Tommy, and Sadi for taking the time today. We hope to see you again. The next one will be on the 15th of July and it'll be based around CIS. Have a great afternoon. Thank you.
Thanks, everyone.